Interest rates have gone up. According to recent data, the average 30-year fixed rate mortgage is sitting well above historic lows we saw in 2020 and 2021. That's made people nervous. Some worry they missed their chance. Others think they should wait for rates to come down before they get back into the housing market. But here's the thing, fear thrives in uncertainty. And the real estate market always has uncertainties. What we do know is that while interest rates have risen, so have home values. And that's exactly where the opportunity lies. If you bought your home just a few years ago, you might be sitting on a gold mine and not even realize it. Between 2019 and 2023, the average U.S. homeowner gained over $90,000 in equity. Before we dive in, let's define what equity actually is. Your home equity is the difference between what your home is worth today and what you still owe on your mortgage. So if your home is worth $450,000 and you owe $300,000, your equity is $150,000. Think of it like a savings account that grows quietly while you sleep, except it grows as your home appreciates in value and as you pay down your mortgage. So how did equity grow so fast between 2019 and 2023? Several key factors led to this massive increase in homeowner equity, such as home appreciation. We've seen substantial price growth across most U.S. markets, fueled by low inventory and high demand. Record low interest rates in 2020 and 2021. These allow many buyers to purchase more expensive homes, driving up prices. Steady mortgage payments. Every month you've paid your mortgage, you've chipped away at your loan and built more ownership. So even if you bought your home within the last 3 to 5 years, you've likely gained tens of thousands of dollars of equity, if not hundreds of thousands, in net worth just from holding onto your property. Why is this equity so powerful for sellers in today's market? Here's what equity gives you: leverage and negotiations. You're in a stronger position to price competitively, offer buyer concessions if needed, or hold firm on your terms. Buying power. You can use that equity as a large down payment on your next home. This can help you avoid private mortgage insurance, PMI for short, qualify for better loan terms, lower your monthly payment. A hedge against high rates. Yes, mortgage rates are higher than a few years ago, but a big equity cushion can offset those costs. A bigger down payment equals a smaller loan, which equals a lower impact from high rates. Freedom to explore options. Want to move up, downsize, relocate, or buy investment property? That equity becomes your launch pad. Here's a real life example. Let's say you bought a home in 2020 for $350,000. Today, it's worth over $450,000. Over that time, you've also paid off $30,000 of that mortgage. That's a total equity gain of $130,000. That could translate to a 20% down payment on a $650,000 home, enough to cover closing costs, moving expenses, and renovations on your next property, or funds to buy a smaller home outright and pocket the rest. Thinking about selling? Here's what to consider. Timing. The spring and early summer markets tend to be active. If you're planning to sell, now is a great window to prepare. Home values vary by region, so talk to a local real estate expert to get a comparative market analysis, or CMA. Your long-term goals. Equity gives you flexibility, but clarity on your next step is key. Are you moving up, downsizing, or relocating? Final thoughts. Don't let your equity sit idle. If you build equity, you've done the hard work. Now it's about using it smartly. Whether you're upsizing, investing, or planning for retirement, your home equity can be one of your most powerful financial tools. Okay, buyers, let's address the elephant in the room. Yes, mortgage rates are higher than they were a few years ago. That's the reality. But no, that doesn't mean you should hit pause on your home ownership goals. The market has changed, absolutely, but lenders have adapted. We're seeing creative buyer-friendly loan options making a comeback. Things like adjustable rate mortgages or ARMs, temporary buydowns, and refinancing incentives baked right into the loan structure. So what are adjustable rate mortgages? These are great for buyers who plan to refinance or move before the adjustment period. Temporary rate buydown are lower payments in the first 1 to 2 years, often paid by the sellers or the builder. Refinance flex programs. Some lenders are offering no cost or low cost refinancing once rates drop. In plain English, You can buy the home now and refinance the rate later when things improve. It's called, say it with me, marry the home, date the rate. Here's the kicker. If prices keep rising, buying now could actually save you money in the long run. Imagine this. Buyer A buys now at a 6.75% interest rate. Buyer B waits a year and buys at a 5.5 interest rate, but home prices have gone up 8%. Buyer A locks in today's prices and starts building equity. Buyer B gets a better rate later, maybe, but pays more for the same home. And they've spent a whole year renting, missing out on appreciation. Bottom line, if the home fits your lifestyle and budget, don't let the rate stop you. There are tools and strategies to help you now and more flexibility to adjust later. Waiting can be costly in both rising home prices and missed equity. The key is having the right plan and the right team. If you've ever been thinking about buying, talk to a lender and a real estate agent you trust. See what's possible. It might surprise you. Let's bust one of the biggest myths in real estate. I'll wait for the perfect time to buy. Here's the truth. That perfect time people talk about, it's a moving target, and most people only realize they missed it after it's gone. Let's rewind and look at what actually happened. 2020. Here's the prediction. COVID will crash the market. Reality, home prices surged 17.2% nationally. 2021. Prediction, housing bubble about to burst. Reality, median home price grew another 18%. 2022. Prediction, rising inflation and interest rates will freeze demand. Reality, demand cooled slightly, but inventory hit record lows, keeping prices firm in most regions. 2023, prediction, a nationwide crash is coming. Reality, U.S. home prices climbed 5.5%. If you're waiting for a crash, you may be waiting forever. In the last 10 years, U.S. home values have risen over 90%. Even during economic uncertainty, the market has shown remarkable resilience. People who bought despite the headlines have seen their equity grow. People who waited, they've often paid the price. That wait and see approach, it's cost some people tens of thousands in missed equity and higher monthly payments. Key insight here. The only market that matters is the one you're in right now. You're not buying into a national trend. You're buying into your own life goals, finances, and local conditions. Real estate rewards action, not hesitation. If the numbers make sense and the home fits your lifestyle, that's your green light. Not a headline, not a prediction, not your cousin's hot take on YouTube. So if you're a seller, let's go through this seller's checklist. If you're thinking about selling your home, here's how to do it strategically and stress-free, even in a market with higher rates and shifting demand. 1. Get a professional home valuation. Use a local real estate agent, not just Zillow. Ask for a comparative market analysis, CMA, that shows recent local comps and buyer trends. Here's a bonus. Ask your agent for a net sheet to understand estimated take-home profit after fees. 2. Understand equity position. Log into your mortgage portal to check your current loan balance. Subtract this from your estimated home value, which equals your available equity. Consider what you'll walk away with after closing costs and agent fees, which are typically 6 to 8%. Here's a pro tip. That equity can help cover your next down payment, closing costs, and even buy down your next mortgage rate. 3. Strategize your pricing. Don't overprice. You'll lose buyer interest in the first 10 days. Use pricing as a negotiation strategy. Consider offering incentives like rate buydowns, closing cost credits, or flexible closing dates. 4. Plan your next move carefully. If buying again, start talking to a lender now to understand your new monthly costs. Factor in moving expenses, temporary housing if needed, and closing timelines. Explore different cities, school districts, or commute options if relocating. Now, if you're a buyer, here's a smart buyer's checklist. If you're buying in this market, the key isn't perfect timing, it's perfect preparation. Let's walk through your action steps. 1. Get pre-approved the right way. Don't just go to a big bank. Work with a local or independent lender who understands this market. Ask about ARMs, 2-to-1 or 3-to-1 buydowns, and refi-flex options. Get a pre-approval letter ready to go, and you'll need it to make a strong offer. 2. Buy now, refinance later strategy. If rates drop in the future, you can refinance. In the meantime, buy the home you love and possibly negotiate rate incentives or seller paid points. I'll say it again, marry the home, date the rate. It's more than a catchphrase, it's a math-backed strategy. 3. Lock in today's price, beat tomorrow's market. In many areas, prices are still climbing due to low inventory. Waiting could mean paying 20 to 40K more for the same property in 6 to 12 months. Remember, you're building equity from day one. 4. Do a real rent versus buy comparison. Add up rent plus annual increases plus lost tax deductions plus zero equity. Compare it to monthly mortgage plus equity growth plus tax benefits. You might be paying more to wait than to own. Final tip for everyone. Work with a trusted local advisor. Real estate isn't one size fits all. A trusted real estate advisor can show you local trends, negotiate creatively, and bring in vetted professionals, lenders, inspectors, contractors to make the process smooth. Knowledge is power, but the right guidance can be the difference between fear and financial growth. If you're informed, empowered, and proactive, whether you're a buyer or seller, this isn't the time to freeze. It's the time to act smart. If you want help creating your strategy, book a consultation with one of our trusted advisors. Don't let fear write your story. Let clarity guide your next move. Thanks for watching. See you next time.